Good morning, YouTube. Thank you once again for joining us. My name is Bennett Tyndall with TradingAnalysis.com. Happy Wednesday, June 17th to you guys. And this is our Elliott Wave Wednesday live stream. Good morning once again. Thank you guys for tuning in. I hope you enjoyed the little bit of an intro and advertisement for an upcoming event that we have June 27th. We'll talk a little bit about that here in just a minute. But thanks again for joining us. Don't you guys just love the production team? It's amazing what they come up with behind the scenes. So good morning, guys. It's been a wild past few sessions in the market. So last Wednesday we came up, kind of presented a little bit of a cautionary tale regarding the overextensions that we were seeing in the markets. We presented the put-call ratio, in this case the call-put ratio. We inverted it, and we were discussing the historical contrarian indicators that are often associated with these reversal points. And as a matter of fact, we've now seen a correction off the top in the S&P 500 to the tune of 8.3%. So following Wednesday's Elliott Wave Wednesday live stream that we had with you guys, we had Jerome Powell's, the FOMC, and then Jay Powell's press conference. Into Thursday, the market started to sell off just a little bit. What's really interesting is this initial five-wave move lower that we saw off the top in the S&P specifically was kind of met with and coincided with some positive news, which led to a fairly significant retracement thus far of that move off the top. We had, the Fed coming out discussing purchasing individual corporate bonds. We had NAHB housing data, which was very positive. We then had U.S. May retail sales up 17.7%, which is really interesting because so many people were pointing out the fact that it was the biggest monthly jump. Yet, if you take into consideration the very depressed levels that we're coming out of, it's, how do you kind of factor everything in there? So kind of take everything that you see there with a little bit of a grain of salt. And then we also had President Donald Trump discussing the possible $1 trillion stimulus bill, or I should say infrastructure bill. So should be interesting to see how things progress. But without further ado, let's go ahead and bring in the team pressing the wrong button here. Good morning, Terry. Good morning, Alex. How are you guys doing today?
Good morning.
Yeah, good morning, Bennett. Good morning, members, traders.
We've got a couple of us here in the great state of Texas. How are things in Serbia?
Well, Serbia rainy these days, so last 7 days, every day, like stormy rains, cars under the water all around the city. That's type of stuff. Yeah, so we did. Yeah, it's really strange. We never had such a powerful rain floods. We have them from year to year, but this year is like pouring out everywhere. So. Still, it's raining, so summer is not on the horizon yet.
That's when you hope you're on top of your auto policy in case of the flood insurance.
Yeah, it was incredible just watching the pictures. I mean, in the several parts of the town, there was just the guys on the top of the cars. Like cars are floating and that type of stuff.
Trying to get rescued. So, my goodness.
Yeah, rainy days here in Serbia.
Well, good. We're glad you're safe, and I'm glad everybody's tuning in. Thank you guys for joining us. Hopefully the chat is good there. It looks like we didn't have any issues on that side, and everything looks good on the stream. So,
and audio, you guys like the audio settings. I think Bennett's much louder today, so very good.
Yeah, I boosted things up just a little bit, but if you do have trouble hearing me, be sure to let us know, and we'll do our best to adjust it there. So, Terry, how are things in your neck of the woods? Doing well?
Oh, good. I feel so much better. I got a haircut.
I love it.
I don't have much up here, but it's down in the back here, and it was just getting down on my neck, and it was driving me crazy. So my barber finally opened, and
yeah, that's one of the good things.
barbershop is you know, kind of the center of the community. It's where all the gossip happens, right? It's where all the guys go to gossip. So that's missed going out there and chatting with people. Although I was the only one in there, me and the barber. Everybody else had to wait outside, so it's one at a time. So not still the same.
Are they making you wear a mask?
Back to the, huh?
Are
yes,
they making you
barber
wear a mask?
Yeah, and then he just, you know, peeled it back off the ear when he needed to get there, and then get this side, and so, but yeah, it was all good.
Yeah, it's, you know, you don't appreciate some of the little things in life until we don't have access to them. I finally gave in a couple months back, and probably about a month ago, and just gave myself a haircut. I think somebody pointed out my COVID cut. So, what are you gonna do? It's you gotta adapt. But very good, guys. Glad you're doing well this morning. Let's jump into it. Futures are kind of sideways here, a little muted this morning. Let's go ahead and bring over the good old Motive Wave window, our preferred charting platform for Elliott Wave. And traders, we were looking at this count last week, and we were discussing the fact that we were viewing this as an overall 5-wave move. And specifically speaking, we were scoring up this March 26th through April 1st correction as a 1-2. And then we were looking at this period of consolidation, which really lasted about a month if you were to look at it, into this May 14th. And a lot of Elliotticians had a tendency to look at this market and think, well, maybe this is a 1-2 situation. And while that was technically valid on a couple of charts, it wasn't valid across the board, and specifically in the S&P 500, we pointed out the degree violation that the 1-2 count would give us there. So, following that wave 5, which really it's kind of a textbook 5-wave move, we didn't really have an extended third wave. So the fact that we do have this a little bit larger than usual 5th wave is not too out of the ordinary. And following that, we put in about an 8.2, 8.3% correction to the downside. The awesome thing about this correction so far is this is the largest net percent retracement following the March 23rd lows, which does set us up for the higher degree wave 2 correction. So the alternative 1-2 situation that we were looking at and kind of warning against, in fact, is now invalidated given the fact that we've seen such a large retracement off the top. If you get off the daily chart and you get you down to the 195 chart, we've seen a fairly significant retracement so far to the tune of between 61 and 78.6%, which is pretty typical in that B wave position. Given the fact that this is a wave 2 of a higher degree, that leaves room for a correction that could be kind of shallow into the area of the previous 4th, or even as great as a 50% retracement, or as you guys know, this could be a typical 618 or maybe even a 78.6. It all depends really, in my opinion, on kind of how the news cycle goes. I think the news that we've seen over the past couple of sessions has supported this B-wave retracement. I think some of the enthusiasm will begin to fade, and we'll see that secondary decline lower. We're looking to take advantage of the secondary decline lower, and in addition, once we see that 3-wave structure come to completion, then explore the higher conviction opportunities on the long side. Currently, wave count invalidation on this particular interpretation comes in at 3233. Here's the interesting part about if we were to break through invalidation. We looked at this with our members in our strategy video update. I believe it was Monday night. Currently, in the event we break through that wave count invalidation, that's going to leave an alternate, which puts the entire March 23rd, or I should say post-March 23rd low price action in the form of, let me see if I can bring this count up, some sort of a series of 3-wave structures, which could very well be an overall B-wave retracement, this being 3 off the bottom to make up W, 3 sideways waves here in X with a nice extended B-wave, and this being A, B, and C of Y. So if we break through that invalidation, this is a count that I'll definitely be looking to, simply because of the fact that we are seeing a lack of motive impulsive counts that would be valid. So hopefully we do end up seeing that 3-wave move. I think it's quite likely, given the fact that we've seen a ridiculous move off the lows. If you take into consideration the low to the most recent June 8th high, that's a 47.5% move. So not too surprised that we're getting this move off the top. Let's go ahead and bring this full circle now. Take a look at at the NASDAQ. The NASDAQ, kind of a similar situation here. In the NASDAQ, I don't believe we've printed the largest correction yet, but still very much so valid as the initial makings of a possible 1-2 situation there. Getting off the daily down to a 195, it's a little bit more tricky of a wave count in my opinion. Notice when we ran into our highest degree Elliott trend channel, which is essentially offered from taking the completions of 2 and 4, projecting a parallel trend line over the top of wave 3. That's kind of where that 5th wave that we're projecting here came to completion potentially, and we're starting to see that pullback. So very interested to see how things progress this morning. Taking a look at what is happening here, not seeing a lot of movement. The S&P is essentially sideways from last night, sideways to slightly up. Bonds are sideways. Gold's coming off just a little bit. So certainly undecided, but we're excited to get on board for that secondary decline when it does present itself. One chart that I want to bring up here to kind of discuss the idea that March 23rd low to the most recent high could be corrective is the chart of the Dow Jones Industrial. And here's a little bit interesting of a wave count. We can't call the most recent top here in the Dow Jones, and we don't typically count the Dow. We're looking at 30 stocks, right? Typically speaking, we're taking our signs from the S&P 500, the NASDAQ 100, some of the leading sectors, and kind of bringing it all into one big picture. Whereas with this particular count, if we were to put our higher degree wave 1 completion at that June 8th high, we're looking at a wave 3 that is the shortest, which invalidates and is a rule violation. So where does that leave us? What are the possibilities here? Well, let's take a look at what we're looking at in terms of net percent correction. 8.05%, 7.9%. Dropping my mouse here. And this was now a 9.9% correction. I hope you guys are getting the picture on this one, but it leaves room for excuse me, for that complex 333 kind of X wave that we looked at in the S&P as a very strong possibility. So keep that in mind if we do break invalidation, as mentioned and noted here in the S&P up at 3233. What we just looked at in the Dow is slightly concerning. And back to some of the sectors that we were looking at last week, we had that wave 5 completion right at equality of 5 and 1, starting to pull back there in the XLC. And let's see, the XLY, consumer discretionary, we also have seen a pretty good pullback here. Let's take a look at the size of this correction just out of curiosity. So 8.2% there. And let's dive now into some individual charts that we have been tracking with you guys and figured we'd bring you up to speed. So one of the charts that we're tracking, excuse me, is that of the chart of Amazon. And this is one stock that's been really doing well in the market and has had a significant move off of its, in this case, March 16th completion. So nice 5-wave move, possibly the makings of this wave 2 correction underway. Excuse me, guys. It's one of those mornings. Facebook. Here's another chart. When I lived in California,
in Texas,
I didn't suffer from them in California as much as when I moved to Texas. Things are a little different here. So Facebook, that's another chart that we do see possibly a little more upside before that secondary decline in the indexes set in. FedEx is another one we've been tracking as a possible uptrend resumption at this point, just looking at it as an ABC. But that's about it, guys. Just keeping ourselves on guard and watching this correction unfold. Excited to see where this takes us overall and hoping to take advantage of those wave 2 lows. Go ahead, Terry.
One thing I want to point out that some other analysts have also noted is if you could zoom in a bit there, maybe down to a 3-hour, and yeah, you see that area where you have your wave 1, your wave 1 to 5 top there. If you look a little closer in there, you can see a gap preceding it and a gap following it. And what that's identified as, that's considered an island reversal. So this island reversal pattern is typically seen at the end of a trend, and so in light of this same kind of things we were telling you over the last couple of weeks, the many different indicators that we were seeing in our wave counts where we were approaching a key reversal point, this is just another confirmation of that. So that's all I wanted to
No,
add to that. I do have a question for you, Bennett. If you could explain your wave count invalidation flag and why you may have to go back to your daily chart in something, but explain your wave count invalidation flag that you hung there. Why was that on the red count or the blue count?
This is on our red count, and given the fact that this is a wave 2 position, given the fact that we are so overextended, I would not be anticipating a flat or a complex in this wave 2. We've seen the makings of what could very well be an impulsive 5-wave move. So given the fact that if that is motive impulsive and is a 5-wave move, we don't want to be breaking through the origin of that. In the event we were to break through that,
see it in this. You can't really see it in this time frame. Maybe 195 or something shows it better. But what Bennett's telling you is that we've got 5 waves down in A. So a flat is going to have 3 waves down in A, 3 waves back up in B, and then 5 waves down in C. So we've seen here developing is 5 waves down, which is the hint that tells us that we are moving into a zigzag, not a flat. And so the second part of that is, okay, what's the difference between a zigzag and a flat in terms of the location of where the B wave places itself? Well, in a flat, the B wave would typically retrace higher than the 786, usually up to about the 90% or the 1272. But since we don't have 3 waves in A, we need the zigzag to correct at the 786. So that's just my takings on why we have it laid out this way. And the invalidation point is essentially at the 90% of the B versus A, I think. Alex, is that how you would put the invalidation point?
Well, depend on the wave count you have. I mean, if you completely outcasted the 1-2-1-2 situation, then maybe you can have some type of a triangle in a B wave, but that still will hold invalidation at the levels. So yeah, I think it's quite okay to put wave count invalidation, because if we go on the upside, we will definitely have to change the wave count overall.
Now, Alex does bring up a good point. The B wave does not necessarily have to unfold into a flat or a zigzag. It could unfold into a triangle.
Yep.
Typically, if we see the B wave unfold into a triangle, we'll see that blue B wave move further out in time, and then that's going to, once we can anchor where that B wave makes its turn, we'll have a better understanding of where to project the end of the C wave. Right now, it's indeterminate at this point, but we can estimate it. And Bennett, I'm struggling here, but with your chart, because I can't move it, but that's okay. So inside your blue B, you've got it decomposed as an ABC. If indeed thank you very much. If indeed we finish the A wave, which it appears, now we're looking for a smaller B wave correction inside of that. And then once we get that smaller B wave finalized, then we can project the green C, which with the discussion I just had, should most likely not breach that 786. Okay, so then we can take our measurements. We really need to see what happens though, because we could go sideways from here and extend this into a triangle pattern.
Yep, absolutely. That was a very good point to bring up here. And as noted, given the fact that this is a higher degree B wave that this green 3-wave structure is a part of, that B wave doesn't necessarily have to be a flat or a zigzag. That could very well unfold in the form of a triangle, which we've seen unfold many times. And in fact, given the market that we're in, this would actually kind of fit the bill, in my opinion, in terms of kind of back and forth indecisiveness as we juggle these levels. And as to Terry's point, that C wave at this point is really kind of theoretical in terms of where we're expecting it to come to completion. Once that B wave is in fact anchored, then we can more accurately kind of forecast when and where we expect that C wave to take us. Given that it's a wave 2 of a higher degree, this could be a more drawn out correction. So very good, gentlemen.
Yeah,
Go ahead.
I don't know in the respect of flat, I mean, how clear is this 5-wave impulse to the downside? That will rule out the flat.
Yeah, I think it's a pretty straightforward count. We have a good acceleration gap.
Okay.
Which, let me get rid of that. So we've got this nice third wave.
Yeah, flat is less likely than option here.
Yep, definitely.
As we have a 5 waves down, so just the question, are we gonna kind of stroll along for some time and then go down, or we will see. But as long as the 786 is holding, we should still expect a corrective pullback, I think.
Absolutely. Well, very good. Terry, you want to bring us full circle and keep us up to speed with where the sectors are progressing? And
Sure. One more thing.
yeah,
Maybe you have time for that. Excuse me.
of course.
How are Modern Picasso asks, how are you guys resolving the last leg down of your 5-wave A move as 5 subwaves? In S&P futures, it's quite choppy. So I think you need to get into a smaller time frame and take a look at that A wave.
I don't want to get into decomposing that A wave here on the stream. What I am going to say is this. Cash session is king. When I was first counting Elliott wave many years ago, and I was having the same conversation with Todd, and I was presenting him wave counts in the S&P futures market that was going against what we were seeing in the cash session. And the first thing he said was, just stop counting the futures market. 90% of the time, it's going to lead you astray. That said, there are instances in which we'll have an after-hours news event or something in which the significance of that move is a little more impactful to the cash session. But typically speaking, the pattern developments that you're going to see trade out in the cash session are the ones that are going to be more dominant and hold up. Not saying that you can't pull a 3-wave move, but I think you need to be focused on cash. Go ahead, Alex.
I can also suggest one more wave count here, if you like to hear.
Yeah, of course.
Okay, so I'm not going to be a judge of a strength of the underlying market here, but potentially you can also extend your A wave where the previous 4th wave is, being now 1, 2, and we go down in 3, 4, and 5, and then complete the wave A. So also this is one of the options. Yeah, so we can have a prolonged wave A if we see a 5-wave development as well.
Yeah, no, you bring up
a further setback. Yeah.
No, you bring up an excellent point. And in fact, last night on our strategy video update in the Premier service, we were talking with our members about that, just pointing out the fact that, guys, just because we have an initial mode of impulsive move down doesn't mean it's A of this highest degree within the wave 2. That could be a 1-2 of A, especially given how deep this wave 2 could potentially take us. So I think that was a very good point to note there.
Yeah, it's also, so we need to monitor these developments in a wave A. Is the wave A finish? And we will know by the length of the further move.
Yep.
On the downside, if we get it at all.
Yep, very good observation there. All right. Sir, are you ready, Terry?
Sure, go ahead.
Let me get us, get us switched up here, and the screen is yours, sir. Take it away.
Okay, so this is 2 days performance, Monday and Tuesday of this week. What we have here is, you know, yesterday was well, Monday was quite a day. Here's Monday right here. We started with futures coming out very low. So the market actually opened much lower than the Friday's close. But then in mid-morning, we made a sudden reversal back up. So you've got an engulfing bullish candle here of the previous downtrend, and then you had a gap up on Tuesday with futures again, but you've got a tall wick, a small wick, and open and close was about the same. And I think this is similar to a doji star, right? I'm not really a candle reader, but usually that means the market tested to try to go higher, and it couldn't. It was range bound. But anyway, between these 2 days, we've made about a 3% recovery from last week's move downwards. Let me jump over here real quick and show you sector rotation in terms of the weekly and the daily. I want to talk about both of these. So in the daily rotation, let's go ahead and just zoom this open here. This is, if I put 5 bars on there, this is last week's price track. Okay, this is what happened to the sectors, through Monday through Friday last week, and we saw a heavy loss of momentum in industrials, financials, and real estate, all which the prior week had shot straight up and moved up into this leading quadrant in the past week, and now they have rapidly started to move south. What's interesting here is, we had technology and communications down here in this weakening quadrant last week, and in the lagging quadrant, and actually started a reversal and started pushing themselves higher. Okay, ultimately what all this means, when we look at our investing time window, or even our swing trading time window, is more the weekly relative rotation graphs. Let's see who's in the lead here. So technology, I want you to look at the length, pay attention to the length of the bars here. As technology pushed down out of the leading quadrant, just hit this border into the weakening, and actually the arrow started to bend and turn. It's like, I don't want to go there. I don't want to go there. So I'm going to reverse higher again. I'm going to come down. I'm going to hit that up. I don't want to go there. This last week, I see that arrow makes a rapid hooking motion, and technology has now positioned itself to push back up into the lead. It just doesn't want to give up the ghost here, guys. This is the key thing. While the rest of these markets, like healthcare, very strong push to the southwest now, losing momentum and relative strength. Here's consumer staples. Here's utilities. Here's real estate's already down here in the lagging quadrant, right? The ones that Bennett mentioned earlier are the ones that we were following last week. It's discretionary, communications, and technology. And why do we continue? Technology is way out here. That's got the highest relative strength ratio of all the sectors, followed by healthcare. But healthcare is pushing down into this weakening quadrant. Then you have discretionary. Here's communication. So this is the look of the new leaders, and we'll jump into those right now. Let me take you into the communications sector. When I look at the leaders, I want to look at the leaders of the leaders. So I want to compare myself to the XLC. There we go. So this is the top 20 stocks in the XLC compared to the XLC. And unfortunately, and I think I even mentioned this last week, let's see here. Netflix is our strongest relative strength, continues, but it's down here in this weakening quadrant, right? Most of these leaders are down here in this weakening quadrant. Facebook is the only stock sitting smack dab in the middle of the leading quadrant. But a lot of these stocks that have got very strong relative strength have recently been losing momentum. What I see, though, is I see a little bending motion starting to happen here in a couple of these, and I wouldn't be surprised over the next several weeks that we start to see some of these that have pushed down in this weakening quadrant return themselves back to the leading. That tech sector showing itself a little hesitant to push further south and wanting to push back into leading quadrant is leading me to believe that some of these guys are going to move in that direction. So let's take a look into technology here. So here is technology, and this is tech. These are the tech stocks compared to the XLK. And there's really only a couple here. You have Apple. Apple has now squarely pushed up higher. I think one of our members, Bennett, wants you to diagnose Apple for them.
Yeah, not a problem.
There's XLK is right there in the middle. And Adobe. Adobe's made a nice hook down here in the weakening quadrant and is now pushing, positioning itself to return back into leadership position. Microsoft's still pushing south. PayPal strong, Nvidia strong, very high relative strength ratios. These guys are continuing to be outperformers. I'm going to switch over. Inside the tech sector is the semiconductor is one of the 6 subgroups, and it's one of the strongest ones. And this is relative to the S&P. But I thought it was interesting to note that of all of this list here, let me see. Let me find the ones that are not in the leading quadrant here. Boom, 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 boom. Not very many, look like two-thirds of the stocks in this semiconductor subgroup in ETF are sitting here in a leadership position relative to the S&P. I found that very interesting. Again, I think semiconductors, you can see Skyworks here, Microchip, Marvell, Cadence, and Nvidia actually been losing, but look here at Nvidia. There's that little hook pattern again, right? Nvidia's been wandering way out here with the highest relative strength for so long. And it started losing some momentum. Looks like it's trying to recapture that momentum. Probably a late stage advance on Nvidia, but you can't deny the fact with this high relative strength that this stock is going to continue to outperform many other stocks in the near future. I'll switch over here to consumer discretionary relative to the XLY, and we'll take a look at where are the leaders. The leaders here. Let's make sure we've got this sorted. And there's a mixed bag, right? This is not the difference here is there's not 2/3 of the stock in any one particular quadrant. You've got a lot of the automakers, the beatdown Marriott, VF Corp, TJX, some of these retailers. Where there's some huge retail earning reports I heard yesterday, Bennett. Maybe we can talk about that. But it's not a consistent story in consumer discretionary. Here's Amazon, Dollar General continuing to decline, although it's got the strongest, between Amazon, eBay, Dollar General, and even here's Home Depot. All of these are your highest relative strength performers. I'm seeing a bit of a turn here in Home Depot. Now, Home Depot and Lowe's, they both operate about the same types of business. Got 2 of those stores here locally, and it's kind of if one doesn't have it, I'm going to go to the other store, vice versa. Don't really pick one over the other. But in terms of looking at performance here, it looks to me like Lowe's is positioning itself to outperform Home Depot in the near term. So leave that for you guys to take and go do your own analysis, and those are some opportunities that I've identified.
Very good,
All
Terry.
right,
Much appreciated. Thank you for bringing us up to speed there. Yeah, just writing down a couple of these names. It's incredible to see the SMH, 2/3 of, or around 2/3 of those particular holdings within the leading sector there. So, all righty, let's go ahead and, Alex, sir, are you ready to bring us up to speed? What's happening on the macro front, and what on earth is Bitcoin doing today? Let's go ahead and make you presenter, if I can find the correct window to make that happen. Whenever you are ready, sir, it's coming at you. And guys, before we get into that, just a Bit of a heads up, we do have, as mentioned at the start of the stream, of the commercial for our upcoming webinar. The webinar is going to be taking place here. Let me bring this up just one sec. Webinar is going to be not this Saturday, but next Saturday, June 27th. It'll be 11 Eastern. You can go to tradinganalysis.com/track, TRACK, to get signed up. We're going to be discussing some of the ways in which we utilize Elliott Wave with cross-market analysis. We're going to introduce you to our new course that we're putting out. So guys, hope to see you guys there. Again, tradinganalysis.com/track if you're interested in getting signed up. And Alex, sir, the screen is yours. Take it away. Save us.
Sure. Okay. So let's just see a couple of markets and what we actually has been following for the last few weeks and what is going on now. So this is a daily dollar index chart. As you know, we have been a relatively bearish on dollar, and I think we are going to come to a decision point when this weakness of dollar might even accelerate more. Okay, so for now we have this wave count as a wave 1 and 2, and then we have a nice impulsive structure to the downside. So if we go on a smaller time frame, we can argue maybe we are still in a subtype of a wave 4, one more push and then correction. But anyhow, I'm going to look for a 3-wave pullback, either from these levels or a little bit below, and then I will expect an acceleration in a dollar to hit the lower levels. Okay, and this will be a big signpost, because if we are in a 1-2-1-2, wave 3 should give us a huge acceleration to the downside. And definitely wave 3s are usually 90 to 85 degrees of fair, which means that you are going to see a relatively very sharp move to the downside. And that is definitely the sign that this wave count is on the right track, and that we are going to see much more weakness in the months ahead in dollar. I will not go into fundamental reasons why I think the dollar is going to move down. There is many of them, and they're mounting off every day, mounting on every day to be precise. So I'm still going to pursue a bearish dollar view. And also I see on some currencies an impulsive wave counts to support this idea from the technical perspective as well. If we look a little bit of oil, oil is basically stalling now in this 37.40 area. So I think we are going to get some type of a pullback while the S&P moves lower. So I'm expecting oil to go back to a 25, 24, 26 region with the continuation of the possible weakness in the S&P. And on the rate side, the 10-year yields are still in consolidation, and we are going nowhere there. So Fed mentioned a yield curve control policy. We still don't know if they're going to apply it, but as we know, they're not going to go negative. So if this things with the real rate starts to be pushing on the upside, I expect in September that Fed introduces a yield curve control, and then basically for some time we will live in the lockdown in a bond real rates, which will basically, according to the Fed, give more time economy to recover with a very low probability that the rates will go anywhere, which has some points, but that will be also relatively negative for dollar as well, because the interest rate driver will be completely out of the question. So if we look some of the currency board, we will see that we have seen several move on the upside in against dollar pair currencies. I'm still going to be bullish on euro, and I'm counting this as a 1-2-1-2, allowing wave one still not to be finished, because I would like to see what this consolidation will give us. But either from a little bit higher or from here, I will expect a nice pullback to the downside and relatively good entry point with a very small risk on the further development in the euro on the upper hand. So first resistance will be this huge from this trend line, which is covering from 2009, 2008, all the way to this level. So this will be exactly around the 117 to 118 that this trend line comes. And if we overpass this successfully and penetrate this on the upside, I will look for a full 5-wave move continuation on the upside in euro, even to 128, 130 levels. So we see these tendencies on many of other currencies like pound. Pound is also impulsive on the bigger time frame. We are still looking for potential developments of another very strong impulsive move on the upside. Tomorrow is Bank of England, so let's see first what they will do tomorrow, and then go back on a pound wave count next time. I want to hear what the Central Bank of UK will have to say with this renewing of the Brexit negotiation with Europe, and we also have a deepest recession in UK for the last 300 years. Aussie is also very constructive from the Elliott wave point of view on the upside, so we are still monitoring some of the wave counts in the Aussie dollar. Also some emerging markets like dollar Turkey, dollar ZAR, they're all kind of depicting that possibly we either finished this dollar move, or we have one more small push to the upside, and then we're gonna see in the next year or maybe even several quarters a lower dollar from here. As the gold is concerned, gold is still kind of moving nowhere, so it's a game of wait and see. I'm still gonna stay constructive on the bullish side on the gold. So the wave count we presented and we are presenting for the last few weeks, for me it's still valid. I'm gonna look for a 1-2-1-2 situation here, and I'm gonna look for a small pullback to this trend channel as a possible support. So all of this zone here for me it's tolerable for a possible retracement in gold. I would not like to see a penetration of this level here because that will change my wave count. Not very considerably, but I will be questioning and I will go in a neutral stance technically if we see break of 1451. So I'm still gonna be, as long as we are trading in this range here, above a little bit of or on the line of 786 retracement from this move down, and in this area where this trend channel is, I'm gonna stay constructive still on gold as well as on silver, which has some really impulsive wave counts nature on the upside. As the Bitcoin is concerned, we are kind of moving in a sideways price action. I'm still going to look lower. We are short on Bitcoin with our members for a very small stop loss. We have been short from these levels here, and as soon as we got this big move to the downside, we moved our stops to very tolerable levels, waiting for a little bit a bigger pullback to the downside. I'm still going to stay constructive on the price of the Bitcoin. Overall trend is still up. We are probably finished this fourth wave pullback. We are looking the log scale, because if you turn out to another scale, this will really doesn't tell you anything. So I don't look the arithmetic scale on Bitcoin. I'm gonna look the log scale. So I'm expecting a push down to 6,500, 7,500 area, and then continuation On the upside, we also have some triangle wave count and some other wave counts, which are very interesting from the Bitcoin perspective. So if you like to see our wave counts and expectations for other cryptos and Forex, please join us. We cover almost 15-20 pairs with our members on cryptos, and we also trade them. So I didn't find any under the quote pro service which gives analysis and trading cryptos in the same time. So we have a very solid results from both ends. So please, guys, if you like to be in a crypto world with us, join us, and that will be it, Bennett, for this Wednesday.
Very good. Much appreciated, Alex. Thank you once again. Let me go ahead and bring over the motive wave window once more, bring you up to speed on Apple, since we did have a request for that, and then we'll let you guys go here. Did have the opening bell just a couple minutes ago, as we can see our countdown timer fading away there. So let's jump over to it real quick. Look at you up to speed on Apple, and then we will send you guys on your way. So as we were just looking at with, and let me just go ahead and get rid of the higher degree wave here just for the moment, because we're focusing on what's really happening from the March 23rd low. At this point, kind of similar to what we looked at in Facebook, and I think we looked at Google, we do have a count which suggests we're just coming out of a fourth wave and kind of pushing higher in some sort of a wave 5. I would expect this wave 5 to be a little bit shallow. We're pretty extended here, and the markets are giving us signs that we should see a near-term correction. So I'd wait for the near-term correction to play out in the markets. If you're long Apple, I love Apple. I think it's a fantastic company. I think it's poised to continue to see growth. You know, obviously depends on your investment lifespan, but great stock and still a good, solid, constructive looking chart for the time being. So wouldn't be too concerned about Apple, but I do think we are nearing kind of a bit of a near-term move lower in the markets. Guys, thank you once again for tuning in. If you enjoyed the work, please subscribe, turn on notifications if you want to get alerted when we post another video. We go live every Wednesday, 8:45 Eastern in the morning here on Todd Gordon's YouTube channel. You can check us out at TradingAnalysis.com. Stock options, stock market analysis, Forex and cryptocurrency services. And again, we do have the webinar coming up next Saturday. So not this coming Saturday, not a few days from now, but the following Saturday, June 27th, 11 o'clock Eastern in the morning, tradinganalysis.com/track if you want to get signed up. Terry, Alex, thank you as always for rocking it, gentlemen. Much appreciated. Members, we'll see you here in just under half an hour. So, guys, thanks again for tuning in. Thumbs up if you enjoyed the content. Let YouTube know you're enjoying it and gets the word out there. So we'll see you guys next week. Thanks again for tuning in. Take care.